Welcome back. Let's look at this problem. But before we solve it, let me give you a background of this problem and why we are doing this. Now, a firm, one of the goals of a firm when it comes to cash management is to ensure that there is sufficient amount of cash in the firm, in the company. And in the daily course of business, you have your debtors, you have your accounts receivables, you also have your creditors and your accounts payable. You owe money to people, but there are also people and organizations and firms and individuals that owe you money. Now, in having an efficient cash management system, you want to ensure that as much as possible you speed up the collections of accounts receivables and thereby releasing cash into the company. Because if you do not have cash with you, let's say somebody owes you on, or a client owes you 500,000, 5 lakhs, and you're only going to get back, say, after 45 days. Now in that 45 days there is locked up capital, and locked up capital means you incur an opportunity cost. Imagine if you had that 5 lakhs or 500,000 today, you could have used it in your business or invested to earn an additional return. But because you are not going to have that money for the next 45 days, there is a locked up capital. So many firms and organizations try to come up with ingenious ways to speed up collections of accounts receivables, whereby you can release cash into the organization. Because when there is cash, there is liquidity. And when there is liquidity, there is solvency, and you can do a lot with the cash. See, you can use cash to to transact your business, but you can also use cash to meet contingencies. You can use cash for for speculative purpose, to invest in a business opportunity and earn a return. But another way of having an efficient cash management system is to delay payments as much as possible. Of course, that may sound unethical, but it is another technique by which you can save some cash, have cash with you. And so this problem deals with that. It deals with something called a lockbox system that helps to reduce the debtors collection period. So let's say debtors collection period is 45 days. By using a lockbox system, you may reduce it to 40 days or even 35 days, and so on. So we will see whether it is worth having this lockbox system or not. See, because the lockbox system costs money, there is a cost involved. So how are you going to decide whether to have it or not? You're only going to decide to introduce a lockbox system if the benefits outweighs the cost. So let's see whether the benefits outweighs the cost in this problem or not. All right. X Limited feels a lockbox system would reduce its debtors collection period by 2 days. The average number of daily payments is 50. Credit sales are 8,000 rupees billed on a continuous basis. However, the cost of renting the lockbox is 3,000 per annum. The bank charges for operating the lockbox system are 72,000 rupees. The interest is 15%. Now, what is this interest? This is nothing but the cost of, opportunity cost of capital. That means if you have the money with you and you invest, you can earn a 15%. If you do not have it with you, you're basically incurring an opportunity cost of 15%. So the question is, should the system be introduced or not? Now, a very simple problem. So, solution. Okay. Now, cash released by lock box system. Now, what is the cash release through this lockbox system? See, every day every day you have 50 daily payments, all right? So, and your credit sales are 8,000 rupees. So rupees 8,000 into the number of payments, daily payments of 50, all right, and into 2 days. So by using this lockbox system, you're basically going to release cash, okay, in 2 days time. By how much? So 8,000 into 50 into 2 is 8 lakhs rupees, 8 lakhs. All right, and so what is your savings here in 2 days time? Your savings would be what? Your savings would be in the form of interest. Savings in the form of interest. So interest savings, all right, will be what? It'll be rupees 8 lakhs into 15%. All right. So if you calculate, that works out to 1 lakh 20. Now this is your savings. Your savings is a benefit less the costs. Now what are the costs here? Number one is the cost of lockbox system. Cost of, I'll just write LBS, lockbox system. How much is that? 3,000 per annum. Second is the bank charges for maintaining the lockbox system, that is 72,000. So deduct 3,000 plus 72,000, that's 75,000. Deduct 75,000 from 1 lakh 20, you will get 45,000. Now this is your net benefits, not the net loss, because the savings outweighs the cost. So the benefits is 45,000. So the question is, should the system be introduced? What do you think? Yes, the firm should go for the lockbox system. All right, so yes, the firm should go for the lockbox system. Okay, so by having this system, you're going to reduce your data's collection period by 2 days. Okay, so this is how you solve a problem like this.